Hey there, my name is Mike Munzing with Munzing Mortgage Group. I'm down here in San Clemente. Been in lending about 25 years. Love being here for you, the realtor, and here for your buyers as well. This week's video is going to be a tale of good news and not so good news, or at least more realistic news. The good news is a number of new programs are coming out. They're going to be very exciting. I want to touch on those. And then the bad news is kind of some other ways to look at the market and what might be coming here in the short term and then in the long term. But first, go to my website at www.mikemunzing.com. Be sure and print out my online rate sheet. You can take it to your open house. You can talk to those buyers. There are a lot of buyers out there. It is very exciting. They are adjusting to the new rates, but let's discuss those buyers. Let's get them talking about the rates, knowing what they can afford, knowing what those payments will be. You can call me when you're out there at the open house. I will be working this weekend, so I can talk to them. If you need me to be there, quote some rates, let them know what's going to be going on, but grab that rate sheet and take it with you. Okay, as I mentioned, in addition to the standard rates that are on the rate sheet, some of the new programs that are hitting the market that are going to be very helpful to you and your buyers. One of them is that 97% conforming loan to value, conforming loan amount, up to 97% loan to value with no PMI. It's an alternative to the FHA. The rates and that monthly payment will be better. It does have more restrictions than the FHA, so if they fit into this program, it'll be fantastic, a great option for them. Next would be what we call delayed financing. If you're working with investors, working with home buyers that have come in 100% cash, this is for conforming and for high balance up to $625,500. So if they come in all cash, we can do a quick loan right after that. We don't have to wait that 6 months or a year to get that new financing. So if they come in, they buy all cash, right after we can do a cash out loan. It'd be fantastic, free up some of that money so you can help maybe sell them another property. Get 2 sales for the price of 1 more or less. Another option there. Next is a new program coming down the pipe. Almost have that finished up, lined up, is the 85% loan to value jumbo up to $1 million with no PMI. So that's a nicer deal, smaller down payment. We're seeing this stuff loosening up. And now for the big one. Now is the FHA mortgagee letter 2013-26. You may have heard about it. I've had some calls on it. I had not found a lender willing to do this program yet, but now I have. I've tracked down a great investor who's going to be jumping on board with this. This is the back to work with extenuating circumstances. What I want to discuss a little bit here is some of the areas. FHA has eased the rules on foreclosures, short sales, and some of the bankruptcies for only 1 year. And early on, when the foreclosures in the market started getting tough, I was saying what the government should do is hit people for those, get them out of the market so they can recover, but let them in quicker. Let them in a year, year and a half, 2 years. That is what they're doing now, down to 1 year. This package that I'm going to link to my email to you and to the YouTube video down below, so you can pick up this 20, 21, 22 page package so you can really break down what's going on with that. It's going to be good for you to know as well to hopefully get these sales going, but it covers the definitions of an economic event. These buyers have to meet certain guidelines. They've had to have lost more than 20% of their income. They have to be back online with a new job. They have had to have cleaned up their credit, but it's only a 1 year waiting time. Very exciting. They do have to go through credit counseling, and the effective dates for these case numbers from 8/15 of 2013 on out to 9/30 of 2016. It is good for purchase money loans only, which is good for you, helps out your buyers. Not equity conversion mortgages, no self-employed borrowers, maximum loan amount to $625,500, and finally the minimum credit score of 640. But this should be great if it works out the way we hope it will to get those buyers, more buyers into the market. Well, now I want to touch on a few considerations to keep in mind. I can't always be giving you great news. We need to look realistically at what's going on, and this is some information that I got from Mark Hansen, my Mr. Mortgage guy. He's a kind of a trader up north. He does look at the market a little bit different, just things to think about, things for you to be aware of. And he's referencing what he calls the surge, that 1.5% or so rate surge that we've seen in the market. And we are looking at the possibility of rates jumping a little bit more now that the quantitative easing has backed off. But he considers that as a third major step in the market that is items you need to consider. Back in 7, 2008, we had, when the market quickly turned, we lost all that jumbo financing. That was quite a hit to the market. The second hit that he mentions is when we lost that, the first-time homebuyer program in 2010, and now with the rates having jumped, that's going to affect us as well. He also mentions that we're ending what he calls the greatest stimulus. That they didn't call it a stimulus, but when the Feds, through quantitative easing, were buying the market down by at least 2%. Back in 2011, the rates were higher, and in 2011, they started buying the market. That dropped us down from in the 5% range down into the low 3% range. That was a long-term, 2-year stimulus to affect the market. And the way Mark looks at that, that allowed the average buyer to increase their purchase ability by about 15 to 20%. And now that we're seeing that taken away, that will affect things. And finally, is what he considers a kind of a bubble here, because through quantitative easing, a lot of the investors who would normally have been in the stock market, bond markets, other areas, were jumping into real estate. That's why we saw such a high all cash buyer mode. You know how many buyers are in there going all cash for investors and others? They were doing that because they could not get yields on their money in other markets. And now that the government is kind of backing off the quantitative easing, those yields may start to rise, and their investment money may go into other places than just real estate investment. They may go back into bonds, other sorts of investments, and not into the real estate. Things are things just to be aware of in the market, not to forget about what's coming in the first of the year. Freddie Mac is going to be kind of wound back to a 43 back-end ratio. We've got other issues facing many of the lenders, myself and all the other lenders that you're dealing with. We all have a lot of new rules that we have to be aware of through the qualified mortgage, qualified residential mortgage, QR and QRM and QM, things that we all need to very much be aware of. I'm going through classes and webinars and training to learn what all these things are. We're still trying to fully define how it's going to play ball, but we are seeing new programs coming in. That's going to be great for the buyers, and that'll help us overcome these other issues so we can really address this market as we need to, with intelligence, with information, looking forward, not hiding our head in the sand. And we just need to all know what's coming. I'm going to try to bring that to you whenever possible, because I want to keep you informed so your buyers are informed and we can make intelligent decisions. Hey, I love working with you guys. I love bringing this information to you. I don't mean to bring you bad news. I just want to bring you real news as far as what I'm seeing and how it's affecting the market. We don't want to be, as they say, Pollyanna about it. I would rather be realistic about it and make good decisions. All right. Well, God bless you. God bless your family. God bless this beautiful weather in our wonderful country. Hang in there. Give me a call anytime. 949-689-5626. Let's work together. Let's work with your buyers. Get them ready to go. And I appreciate it. Bye-bye.